Hello, the Singtel 2015 annual report is the first one to bear the new logo, the one with the lowercase t and the 5 dots on top. And it comes at a time that Singtel seems to be making progress on its transformation. They're now in their third year of not just moving with the digital times where everybody's connected and is expecting a data connection at any point in time, but they're also looking to shape that transformation. And so here we are 3 years on, and Singtel seems to now be focusing its efforts. Chairman Simon Israel says so in his statement on pages 10 and 11 of the annual report, in case you want to read along. He says they're now sharpening their digital play and focusing their resources on 3 distinct businesses. Hook is their entertainment platform with content providers Sony Pictures Television and Warner Brothers, servicing people in the Philippines, Thailand and India with their entertainment content. Now, it's a so-called over-the-top OTT service, but what's significant about it is not just that it doesn't use fiber optic cable like most cable television providers, and it doesn't necessarily even use copper wires, because in these countries, Philippines, Thailand and India, chances are they might not even have those copper wires going down their street. So the unique thing about Hook is that it can also transmit this media content through Wi-Fi networks. In the middle, Amobi. This acquisition of the mobile marketing platform a few years ago raised quite a few eyebrows, but they've made some additional takeovers. They've added new technology to Amobi in order to make this mobile marketing platform really zing globally. And the one on the right, DataSpark, possibly the one to have received the least attention at the moment. DataSpark is in analytics. So we're talking about content, over-the-top movie provision and entertainment platform, mobile marketing, and analytics as being the top areas that they want to focus on. Incidentally, they also announced an acquisition of TrustWave during the financial year, although it only closed after the financial year was over. TrustWave, together with the other parts of that business, really look at cyber security and cloud services. So this is, I suppose, where this transformation is leading. Is it yet bringing home the bacon? For that answer, we turn to page 148. On this nondescript page, you can see the breakdown of where their revenue is currently coming from. And you can see their digital businesses is the third from the bottom. And at just over 330 million, it's now just over half their international calling business. So you can see it's still a very small part of the current revenue pie. But as I say, there's a lot of focus in the annual report about these businesses, so presumably we can expect to hear more from them later on. Let's turn to page 6, where we see the highlights for the 2015 financial year, the one that ended March the 31st. And what we see first of all is the revenue figure. This is the operating revenue number, which is up there by 2% at 17 billion. What you see by turning to page 97, when we see the 5-year history, is how that 17 billion has come about, looking back over the previous years. Yes, it's up compared to last year's 16.9 billion, but in prior years they actually had more revenue, more than 18 billion in 2011, 2012 and 2013. So in a sense, the revenue increase that we saw in the financial year under review is really only just getting back towards what it was previously. And the other thing that's interesting about this particular breakout from this table is where that 17 billion in revenue came from. You can see there that Singtel, that's the Singapore part of the business, that's increased to 7.3 billion. It was less than 7 billion in the 4 prior years. And Optus, the wholly owned Australian business, and by the way, they delisted from the Australian stock market recently, Optus has actually still struggled. It's down from last year, and certainly a far cry from the 11 or 12 billion dollars that they made in previous years. Now, some of that is obviously due to currency fluctuations, which I'll get on to in just a few moments. But even if you look at the Australian dollar numbers in this table, you can see that Optus, yes, improvement on last year, but still falling short of where it was in the 3 previous years. The commentary in the annual report about Optus is that actually things are going rather well given the competitive nature of the Australian telecommunications market, but certainly one to watch for investors in a company which is so regionally diversified. Let's get on to the profit numbers too, and there's quite a bit of detail here that as shareholders we need to know about. First of all, the headline profit figure, which certainly was up 4%. If you take out all of the abnormals, profit was actually up 5%, and I'll come back to those abnormals in a minute. And if you also look aside from the currency trends, in other words, if everything else was equal and you just took out how the currency movements affected the bottom line, we see net profit actually up 6%. So once again, you can see that currencies make a big impact, and in particular, the weaker Australian dollar, the weaker Indian rupee, and the weaker Indonesian rupiah all had an impact on the bottom line. Would have been so much better if those currencies had remained the same. There's also, on page 108, a very useful explanation of what sort of impact the currency movements have. And you can see there that if the Australian dollar strengthens against the Singapore dollar, it makes it by 10%. It makes a difference of almost $100 million. So have a look at page 108 for this sensitivity analysis of the currency changes, just to get a grip on how much of an impact this has. Now, when we then take that back to page 97 in our 5-year history, check this out. The Australian dollar at the bottom there has gone from 125 to 131 to 128 to 117 to 112. So as the Australian dollar's weakened, that's also weakened the profit that's translated back into Singapore dollars, and that's part of the reason why Optus is not performing as well as it once did. Underlying net profit, I mentioned earlier that was up 5%, more than the headline 4% increase. Underlying net profit strips out abnormals, and you can find those abnormals on page 159 on this page over here in the notes to the accounts. And what's curious about the exceptional items in the note 8 here is some of the gains they've had. Gain on dilution of interest in Singapore Post, that's boosted the abnormals. They've also had available for sale investments, AFS for short. By selling them, they made an extra $38 million. But on the downside, they had cost of staff restructuring, which cost them $43 million, impairment of available for sale investments of $25 million. I looked through the annual report. I couldn't find anything on what those available for sale investments were that had been impaired. But anyway, you can see that it has had an impact on the bottom line. You can read more about the available for sale investments, by the way, on page 184 if you want to pursue that further. Let's look at cash flow now, which is obviously really what investors need to look at, not just the headline profit number or any of the other profit numbers, because after all, it's the cash that counts. And Singtel is still generating a lot of cash, $3.5 billion. In fact, the 5-year history on page 97 once again shows us that is certainly bouncing back from the $3.2 billion that was generated last time. But hey, we're talking about very substantial amounts of cash coming in. And you can also see how the various associates contributed to that as well as Optus. Moving along, let me point out to you the question of borrowings, because having cash coming in is of course very important, but how is their debt position looking? And for that, here we go, page 189. For more, we can see that the amount of money that they owe in terms of bonds has increased, but also bank loans have leapt by $1 billion. So total unsecured borrowings now having gone from 7.8 to 8.7 billion. The dividends also of interest. Here is the headline number, 17.5 cents per share, 4% more than last year. But I quite like this chart on page 7 because it shows you how the trend in dividend payments has been going. And you can see ever since 2006 at the bottom of this chart, it's just been increasing. Now on to page 149, management compensation. There was quite a bit of news about this recently. When this document was first released, there was some discussion as to why it was that the chief executive, Chua Sok Kung, has increased the amount of salary that she has received. You can read more about it here on page 149, and you can see Executive Director has gone from 4.7 to 5.6 million. Chairman Simon Israel then put out a statement to the effect that if you want good people to lead such a diversified, large conglomerate, then you need to pay accordingly. Curiously, the other key management salaries has actually declined from just under 11 to just under $10.5 million, while the directors' remuneration has gone from 2.1 to $2.5 million. The Sustainability and Governance report sheds more light on that, and you can see here what the directors have received in terms of payment. This is page 72 if you want to look it up for yourself. What's noteworthy about this number, and also the next chart here on pages 76 and 77, is that the amounts of money that all of the management have received has actually been documented down to the last dollar, which certainly, whether you like the numbers or not, the fact is that Singtel is very good about declaring exactly what the interests are and what everybody's gotten paid. So as an investor, at least you know exactly what's going on. The annual general meeting is on 21st of July at Suntec Singapore Convention and Exhibition Centre. It gets underway at 3 p.m. Make sure you read the annual report before you go.